Welcome to Futex Live and a free segment, a free video that I just wanted to put together. A very small video talking about inside day breaks and the importance and context of them that can have really sort of rather long lasting effects in the market. Now, for those of you that are aware, this is a market profile chart, and it basically is another way of replicating data and showing traders in particular where the market has been, how the market has rounded out. It's a statistical approach, and it's one that has been used by traders for a long period of time, and it basically sort of correlates and charts the prices in terms of letters. But the context that I wanted to show you was of one that was a very quiet day, and I will explain why it was so quiet and how it actually went on to actually affect the market for what has been now about 10 days thereafter. So this is the day that I was looking at, and it was a very quiet day, and one that you could very easily forget. The previous day had extended lows well below 111.63, and the previous high had obviously, as you can see on this chart, got up to around about 112.19. And we came in the next Monday, and it was a very quiet day. So what this chart is showing us is that we had moved up and down throughout the day, spending the vast majority of it in the middle of this sort of bell curve here. Prices not moving a great deal, with a low of 111.77 and a high of 112.03. So you need to remember those two numbers and those two figures, 112.03 and 111.77. An incredibly quiet day, one that a less astute trader may have ignored. But what it actually did mean, and what it did show us, is that this market had what is termed as an inside day. It means that the previous day's range was vastly bigger than the range that we've currently seen. So this range, being incredibly small, lay within and inside the previous day's range. So if you can just see, we're scrolling up, the low is obviously a long way down off the chart, and the high is up here somewhere, and so this is your inside day. So just to recap, it's when the day, in the context of this day, the high and low of this day is entirely within the previous day's range. It's termed as an inside day. Now what you see and what you look for is when breaking through the inside day, so the high of this inside day, you're looking for the market to gain momentum and carry on in the direction of its break. So in this case, you can see that later on in this session we broke to the upside. So we broke through this 112.03 area, and the market continued to move higher, and it moved significantly higher over the course of the day and ended up a 50 tick profitable trade if you were buying at the break point of the inside day break. Now thereafter, how did the market develop? How did the market unravel? And why did it stay so important? We've already got one trade here where the market has broken higher from this inside day break, and so there was definitely a profitable trade to be made there. But if you look back and see what happened in the days following, the market actually rejected what was this break higher and this inside day break. The market said, actually, no, we don't like it up here, and it started to pare its way back and come further south. So you can see that all of these smaller case prints are in the morning, and then as we got to the afternoon, the market started breaking lower. Now look at which point the market accelerated from. It started accelerating when it got back to this very quiet, very peaceful inside day that you could have forgotten, and the market said, this is where we realise we're wrong, and we accelerated back into this previous inside day. Then, as the day carried on, the market never got back above this area here, this 03, 07 area. The market maintained its resistance, maintained its characteristic of not enjoying this inside day break, and it carried to break lower, and it picked up momentum as it broke through the underside of this quiet, easy to ignore inside day at 111.77. Now the market then carried on for a couple of days, and look what happened the next day. This is the very next day after we have completely and utterly rejected this inside day break. Look at where this high lay. The market came back and it had a look at the underside of this inside day, and it said, no thank you, we want to proceed lower. And the market did start to move lower and eventually moved 40 ticks to the downside on that day. So I hope that you can see, carrying on through the charts as well, that the market never breached that 112.03 area. We kept seeing resistance at the low of that inside day break, and currently where we stand, we have actually spent all of this time rather a lot lower, until such time as we have yesterday moved significantly higher, and look at where the market stopped again. Right back up to the 112.07.5. That is exactly where the market has stopped. This is now the 10th, so this is now sort of when I recorded this it was the 11th, so this is now a day later, and this is today's market where we have again come to this 112.08.5. So from one seemingly very, very innocuous quiet day where the market did nothing, said nothing, was very, very passive, we had two levels that came to fruition. We had the high area, which was up here at between this 03 and the area that we identified where the break point was, which came in at the 08s. So if we just scrunch it up a little bit more, there we go. So it's this break point here from this high here, so a very, very small margin of area that you can trade and react on. And of course the other area that we had was from this day at 111.77, which, as I have just shown you, has reacted as a significant area of resistance for quite some time. So pretty amazing stuff, I think. One very quiet day, one easy to forget day on the 1st of August 2016, and now we sit here 10 days later and we are still using these inside day markers as incredibly key, incredibly pivotal areas in the euro, and that is just scratching the surface of some of the analysis that we use here and that we teach here over at Futex Live. But I hope that that has helped. I hope that you understand some of the context in and around how we look at things, and how charting techniques can really help you to progress your trading career, can help you to make money, can help you to achieve the goals that you would like to achieve as a trader. So thank you very much for listening. If you have seen this on the website, then please stick around on the website and have a look at some of our other bits and pieces. There's plenty of videos there. Maybe take out a trial, and of course have a little look if you are interested in joining us in terms of some of the courses that we run here. There's some new class dates up starting the 26th of September. We cater for in-house trading floor training or remote training, so please feel free to log in, have a look around, and maybe join us on one of those dates. If anyone does need anything, then please get in touch via the website or reach out to me. My Twitter handle is at @DMG_trading, and I will do my best to get in touch with people and help them wherever I can. All the best, and I hope to see you on one of our courses soon.